Welcome back to my channel. If you're here to make money from cryptocurrency, well, you're in the right place. Whether you're a beginner or advanced, being able to read Bitcoin is going to be a major advantage. And that's what we're going to focus on today, because today is the first part of a 10-part series. Now, we're going to dive into what is very likely to occur with Bitcoin over the coming weeks and over the coming months. So what I have on the chart right now is a monthly chart. And we can see with Bitcoin in 2017, we had this big run up. We had a long drawn out correction. And then we had this massive pump topping out in November 2021. But for almost, over a year now, coming up to a year and a half, it's just been a big bear market where the price has dropped significantly and a lot of money has left the crypto markets. But we have had this recent surge where the price has almost doubled from 15,000 to 25,000. And that gives us a big clue that this might be the beginning of a bigger degree trend that's going to last a number of months and possibly the whole of 2023. Now, we can only ever do probabilities and never certainties. So I use a methodology which is momentum, pattern, price, and time. It makes life very simple. And all of the fundamentals, all of the news, all of the on-chain data, everything is baked in to the current price action. And that's what we're going to focus on. So I'm going to focus today on the macro, larger degree momentum position. And by the way, if you want the latest updates with Bitcoin, I actually now have a free Bitcoin membership area where I do regular updates, where it's timely information. It's free. Check it out below. We've just done our last one over the weekend. So I think you'll get a massive value from this. So we are going to pull up a momentum indicator. Now remember, we're on a monthly chart. So we're looking at like 5-6 years worth of data over here. But the key thing I just want to emphasize in this part, it's part one of a 10-part series, is that we've had this turn in the macro momentum. This blue line has gone above the red on these two. And it coincides with this big surge up. Could this be the beginning of a multi-month, longer-term trend to the upside? And we're going to go into a lot of detail over the 10-part series. Now, the last time this happened, if we look down here, it tended to coincide with this low and then also over here as well. It tended to coincide with this low, and then we had this micro surge and then this big surge up with Bitcoin. So the high probability outcome with Bitcoin over the coming months is that we're probably going to see it at some point hit 40 to 50,000. And what we're going to do in the next part, which I'm going to be doing tomorrow, is dropping down into a weekly chart, and we're going to set some specific time targets. How long does it typically take for a correction to occur, and what's the minimum expectation? Now, I also use something called Elliott wave theory, which is how to read the psychology of the markets. And what we know, because there's a thing of what we know and what we don't know, and we need to be aware of both, is that we've had a very impulsive move to the downside. So we know from an Elliott wave standpoint, we should expect at least 3 waves to the upside, at least. And that gives us a really clear picture on what's the minimum expectations. So join me tomorrow for part 2, but remember to take advantage of the free Bitcoin report. Today we're going to finish on a quote. Every day I'm going to finish on a quote from the famous wise Socrates. And today's quote is, "Falling down is not a failure. Failure comes when you stay where you have fallen." You've heard the term, dust yourself off and get back up and try again. Well, it's been proven with neuroscience, with social sciences, that beneath every success is a mountain of necessary failure. And Socrates says it beautifully. Falling down is not a failure. Failure comes when you stay where you have fallen. All right, I'll see you for part 2 in this 10-part series.